morning, everybody. Welcome to the Trading Market Technicals morning call video for Friday, December the 7th. Well, another day of chop, inside day. Markets are apparently waiting for some sort of decision, a non-farm payroll that's coming out today, because we have gone absolutely nowhere in 6 trading days. Right in front of you is a 15-minute chart, and as you can see, we're literally in this range, this upper end of the range, which is very telling that the market does want to move higher. Now, we've been back and forth for the last 6 trading days, but we really haven't gone anywhere. Was looking for a little bit of a pullback, somewhere down to the 1395 area in the S&P. However, this market has gone nowhere, telling me that this is the risk is going to be to the upside. And I would love to see this market pull back a little bit so we can literally start buying dips and buying this market with 2 hands, especially at these levels. Risk is a little bit greater, but that's what we're dealt with right now. So we'll see what happens today with non-farm payrolls. Maybe non-farm payrolls come out a little worse than expected. We get a 2-day sell-off today, Monday, Tuesday, and then they start buying them because now we're getting closer into the holiday season. But there is no question about that, that this market is looking to move higher. So what I wanted to show you here briefly before we get into the charts is that if you follow a 15-minute rule, this generally is going to keep you out of trouble. And here's a 15-minute chart, and I wanted just to show this to you in general. But if you look at a 15-minute candle and you draw a horizontal line from each 15-minute candle, it'll basically tell you if there's new order flow coming into the markets that day. And by what I say is that if this 15-minute candle here, for instance, and then we take another one down here, and you generally just run it across, you would see that there's no new order flow for the day. So you have to be a little bit more selective in your trade ideas. And that's what really kind of keeps you out of trouble. Now, 2 days ago would have been a great day, right? That 15-minute candle broke lower, and you would have been short all day, looking to sell any rallies. However, sometimes the indexes move, and the stocks really generally don't move because they're still being bid up. So any pullback is being bought. So that's why it's a frustrating time this week has been, because of the fact the markets have gone nowhere. But it's a good general rule of thumb for a 15-minute rule if you guys are trading it during the day and you're in front of computers all day. All right, so let's take a look what we have. We have econ data coming out. Michigan sentiment, big mover. Consumer credit at 3 o'clock. We do get some sort of reaction, but the big one is the non-farm payrolls. Continuing claims, initial claims. This is going to be big here. 8:30 is going to be a big number, and that's something that I'm hoping that this market can move one way or the other. Now, I'm still looking for a 1430, 1424. What I'm thinking is that if the market does move higher, it moves higher quickly, hits that 1430 area, and then gives us a pullback, and then we buy into it for the year-end rally. Now, again, this is just hindsight here. We're just conversation. So let's see what happens if this market does do that. But I will be watching the reaction of the markets this morning and the coming days to see if we do test that 1430 and then sellers start coming out of the woodwork. But we'll take a look. But until then, we'll take it one day at a time. All right, so let's take a look at our NYMO. Again, plenty of room. We are not overbought. We are not oversold. Plenty of room to run higher into overbought territory, and plenty of room to sell off into oversold territory. That's really all that is telling us right now. So wherever the market is, and as we get these consolidation days, the market is taking a breather. Again, bullish. So just, guys, please keep that in mind. I wouldn't want you to go out there and look just to short this market. That would be very, very dangerous. All right, so copper. Copper had a little bit of a pullback yesterday. And that's healthy because we had a nice little run. I'd like to see this copper pull back a little bit more right into those confluence areas of the moving average, and that's what I'd like to see this thing hold, and then a reversal candle and move back up again. So let's see if copper can kind of lead the market a little bit lower, 1395, 1385 in the S&P, and then move higher. But that's something that I'm going to be monitoring as well during the day. Okay, take a look at the dollar. Dollar had a big day. Now, here's another thing that's giving me a bullish sign. Dollar had a big day yesterday, a real nice day after the sell-off, and gold didn't sell off. The GDX, the Gold Miners Index, actually was up a little bit. Commodities did not sell off, and equities didn't sell off. So that's another good sign. If you're looking at these charts every day, or at least at night, you'll get to see, say, wait a minute, And by the way, guys, right now it's inversely correlated, and we do have, if you do an overlay, which I'll do over the weekend for you, a dollar and the SPX chart, you'll see how far to the mean it is. So eventually it's going to have to come back to that mean. And that's what I'm kind of looking for right now on a very, very short term, 1 to 3 day sell off. If that's even going to happen. But anyway, stochastics are oversold, as you can see, and we have our ratio chart, US dollar SPX ratio chart, just starting to kind of tick up right now. We're just kind of flatline here, but that's also something to watch for if we get continued strength in the US dollar. Okay, now I want to follow up with a couple. I mentioned coal and I mentioned GDX. I want to show you the GDX chart. Now, this is going to come into play kind of eventually at one point in time, and I'm hoping sometime this month, it's going to be a big, big trade. Now, this is the gold stock. This is gold itself, the daily. And as you can see here, we're holding a 38% retracement. I would love to see a bigger sell-off into this 200-day, really pierce the 200-day, shake all the longs out that have been buying way up in this area here, and then the market would rally hard. And that's how really gold basically trades. But we'll see. We look at a ratio chart here. We're still oversold, but now we're starting to hook around. Let's see if we get that stochastics to roll back up and our ratio chart to roll back up as well, breaking this downtrend line. And now we do have a lot of overhead resistance up here, but the real big key is going to be 1800. 1800 break and close, consolidate. It's going to probably set another stage of a bull run in gold. But again, gold right now just had the surprise sell-off here when we thought gold was looking to go higher, but broke out of this wedge, and this wedge played out nicely. Now, the GDX. What I'm seeing in GDX here is a bullish fallen wedge pattern. Now, this is going to be really only for a trade, but you got to realize the gold sector is seasonality has strength to it. Now, it hasn't shown it, and again, it doesn't have to happen, but it is actually showing some signs of strength. A break above this rising, this upper end of this wedge, and this 20-day moving average of 45.93 and hold, I think you're going to get a nice trade out of this thing, at least to the 45, 46, 47 area. Now, what happens in these wedges, they usually break, and then they back test, and they try to create that higher low. And that's what we're looking for, that break for a trade, a back test to buy into, and then probably a move up to this area, maybe into this consolidation area up here. That 200 period will come roll back down again by the time that, if it does get up there at all. But I'm watching this. I'm looking for a nice a trade and maybe a possible swing trade come the end of the year or even into early January. Now, I mentioned coal, and I want to show you the coal ETF. Now, it has a variety of coal stocks in it. ANR, ACI, and BTU are three of my favorites. WLT, there's always headline news in it that it's getting bought out, and if it doesn't get bought out, the stock gets sold into, so I'm really not looking to trade that. But the three, ACI, BTU, and ANR, are something to really keep an eye on, guy. This is a huge base building that this ETF has been doing, and as you can see here, we have some little bit of strength. We actually had a beautiful big pop out of this range, and that's because China actually is going to start buying coal again, and that's a big event for the coal sector. So keep an eye on that as well. Okay, I'm looking for some trades. I'll let you know when that does happen and does occur. But if this coal does break out, you're going to look to probably at the higher end of this range here at $32, because this has been building a base for several months now, and when that happens, you usually get a big breakout, a back test, back here into that, and then a really big move higher. So keep an eye on that, just like the solar stocks did. It's exactly the same way. All right, let's go into our charts. 60-minute S&P cash. As you can see here, excuse me, let me just get that daily. Let's look at the daily chart first. I had mentioned that we had an inverted head and shoulders on a 30-minute chart. This possibly could be taking shape into an inverted head and shoulders here on a longer term time frame on a daily chart. Now, if I just take this and I make this a little trend line here, this would be the head, left shoulder, and carving out a right shoulder now. Maybe we get one more pullback to that 20, and this little area here, right above that 20-day, would be that right shoulder. It would be a slanted neckline here. So, again, I think it's a little too early. But if that's the case, and we do get this pullback back down to this area here, that would create that whole right shoulder, and that would really look like an inverted head and shoulders. So, and I see it in all of the indices. But anyway, getting back to yesterday's performance, as you can see here, inside day from the previous day, 3 days, and then we had that little gap area here. So, still in that bearish rising wedge configuration. So, I'm gonna look to to see if this wedge really does play out. And again, it's right now it needs to break below it, back test it, and then roll back over again to really get this thing going. Okay, 60-minute again, guys. That bearish rising wedge we have on a 60-minute has not panned out yet. We did break it, but we're just consolidating, as you can see here on the 60-minute chart. And let's see our RSI just kind of hovering in the 50 percentile. 30-minute Bollinger Bands. Okay, we're pinching. That means that we're looking for a big move. As you can see here, see in here, we had a little bit of, and that's not even a great move, but we had a little bit of move here, a little pinch here, back higher, and now we're pinching again. So keep an eye on what happens today with non-farm payrolls. I think that's going to get a reaction to the markets. I would not surprise me if non-farm payroll numbers come in good, and then we start to rally again. So just keep an eye on that, but that's definitely telling us the move is coming. Remember, it does not tell you where the move, which way, what direction the move is going to happen, but I think risk is to the upside. And again here, spiders, just to give you the same thing really, inside day. Low volume yesterday, really anemic. I tell you, this has just been horrible. Inverted head and shoulders on the 30-minute, again, validate. Now we're just sitting above here, looking at this break. If you look at a 30-minute chart, look at all of the days we've just been sitting in this range. Really nothing. You have to, and if you're blessed enough to run through a stock that's actually trading in direction of the trend, or at least just trend trading for the day, you're lucky. Okay, transports. Sitting right up here above the 20. We did have a 2.5 day, let's call it, if you will. Now we got a little bit of a doji, and we're just kind of sitting there. I love to see this transportation sector really start moving here, and that's going to really help with the bull case, and we can really start breaking out here. But as you can see, really since June, we have gone nowhere in the transportation sector. So interesting to see what develops here going into, again, seasonal strength time of the year for them. And the diamonds, again, look at this left shoulder, head, and then carving out a little bit of right shoulder, slanted neckline, but again, below the 50-day moving average on all of these major sectors and indices, something that we're going to really need to watch and develop here. But this sitting here and not going anywhere, really pretty bullish. And the Russell, same thing, Russell, left shoulder, head, start carving out a little bit of right shoulder, maybe a little bit of a dip lower, but we'll see. Again, I think that's too early, but it's something to take a look at. And as you can see here, now the Russell had a little bit of weakness, but rallied back at the end of the day. And this is just sitting here now, still above this 81.65 area. A break below that would catch that gap area of support. We did fill it the other day, but let's see if this if we can move back lower. Look at the 200-day moving average, totally flat line. The 20-day moving average, totally flat line, telling me indecision, inside days, sloppy, choppy trading. So just please, when you're reading those moving averages, make sure you look at it. You have to adjust your trading, because 2-3 stops, call it a day, reevaluate, and look for trades for the next day. Same thing with the XLF here, guys. So the theme's the same, but we are above the 50, above the 20, and the 200. This is actually very bullish. And if I take this, let's take this upper trend line here and kind of move this over. Right about there. And you can see that this is going to be our first top area, 1640. All right, take a look at Apple. Apple broke lower, actually retested this lower trend line here, the first lower trend line, long-term trend line, and now actually had a big bounce here. And this is a weekly chart, remember. So this is that first area here in the week. Now, if I show you the daily chart, you can see what happened. Now, daily chart, I told you I have my comments here. We had that gap fill. We did fill the gap. We tested this 522-ish area. Actually, we went even lower than that. We went to 517. I think Apple's in trouble. This needs to build, this reversal candle. If Apple can at least get back up and reverse, and we can get back above this 20 and 50 and 200 day, then I think you got a good shot, a good trade to the 630, 640 area. But then I think you'd really need to evaluate. Any longs down here would be getting out in here, because I think Apple's got some issues. But anyway, a nice recovery from Apple. Me personally, again, I'm staying away from it. I think Apple's got other issues to deal with, and there's better trading out there than trading Apple. And take a look at our Qs. Nice big move up. Again, above the 20, below the 50 and the 200. It's going to need a little bit of work here. But guys, take a look at the charts. Yesterday's low, again, and yesterday's high, that's going to mark a pivotal point. Mark your 15-minute candle and then look for trades that way and trade in direction of the trend. That's going to be your best bet here. And one more. Let me take a look at the SMHs. SMHs have been consolidating here just under their 200-day moving average. Now, again, a seasonal seasonal time of the year, actually positive. Let's see if this can break out higher and at least test the highs here at about 34. All right, guys, have a great weekend. Watch the non-farm payrolls. Let's see what kind of reaction we get out of it. If we get a movement to the downside, 13.95 is going to be my spot where we're looking for, and then reevaluate upside targets of 14.24, 14.30. Have a great weekend again, guys, and I'll talk to you on Monday.